me beautiful words, wonderful words of joy, of peace, of happiness. He gave beautiful words. He gave to me. Wonderful words of love. He gave to me. He gave wonderful words of love. He gave beautiful words. He gave me joy, me happiness. Wonderful words of love. Trust in me, have no fear. I supply your every need. He gave me wonderful words. Ba, 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 ba.
Happy Thursday, everyone, and welcome to my Zoom on self-credit dollars for Schedule C filers. I am Lisa A. Wright, CPA, business strategist, developer, and virtual CFO. I'm going to wait a couple of minutes to give some of our other guests time to join us, and then we'll begin, and you'll be able to enjoy the rest of your evening. I thank you for taking your valuable time to come out to share with me as I share with you some valuable information. Just hold on tight. Well, I'm going to be Jewish tonight. We're going to get right started on the event. First, let me introduce myself and who I am. I gave you my name, but let me give you some background information about who I, Lisa Wright, am. I am Lisa Wright, of course. I'm a CPA, I'm a business developer and strategist, and a virtual CFO. I have utilized my 25 years to form my own company, and my goal is to allow other people to create wealth generation transfer as they realize their financial goals. I have been blessed to have various experiences, such as working in entertainment on both sides of it, working with artists, as well as working as a director of finance for an amphitheater. I have started various types of businesses, whether it's a pharmacy or a smoothie king, or even a business school, and helping entrepreneurs like you get started. And my goal tonight is to share with you an important venture that I heard about that impacts you, that Schedule C filer, you, that person trying to make money or making money, and letting you know that during the pandemic, Congress and our representatives and Senate did not forget you. Many people heard about the PPP loans available to other corporations, but no one was aware that there is a self-employment tax credit. And it does exist and it's here for you. And that's what we're going to get to tonight. Next slide, please. So one person I didn't talk about was Mr. Herman J. Russell. I had the pleasure of being his personal financial manager for 4 years. And during that time, he helped me see how he created wealth, how he transferred his wealth, and how he ran his business. So during that time, I actually earned my personal MBA, and I'm grateful for that. I'm also, as I said, a licensed CPA in the state of Georgia and Pennsylvania, as I do hail from the Northeast. And I also have various industry specializations, such as small businesses, nonprofits, entertainment, and professional service corporations. Next slide, please. Oh, there it comes. So my goal is to equip, educate, and evaluate entrepreneurs for success. My disclaimer is this presentation is for general education purposes only. This does not serve as a contracted accounting service or advice. All participants should talk to their own CPA about their individual questions, including about all topics discussed. No specific questions about the subject matter, meaning your personal tax situation or question, will be addressed on tonight. But I'd love to schedule a consultation with you and have that conversation. Next slide, please. So you want to be the boss and follow Schedule C. We're going to learn tonight what that really means to you and how it impacts your taxes. Number one, that means you don't get a regular paycheck, but you should receive a W-2 or a 1099, I'm sorry. And as a Schedule C, I don't think people realize that you agree that you're going to pay both the employer and employee share of FICA taxes on your tax return. So this is where that credit is generated from. When they talk about self-employment taxes, they're referring to Medicare and Social Security taxes. And this is where this company has derived, will derive your tax credit from. Notice these taxes are actually calculated on your Schedule C based on your income and loss from your Schedule C. So for example, if you had $80,000 of revenue and $60,000 of expenses, and you had $20,000 of income, you're going to actually pay your Social Security tax based on that $20,000. And one thing people don't also realize too, as a Schedule C person, you pay federal income tax on your tax return also. So you're doing everything at the same time. Now, also, what people don't realize is when you're paying into your Social Security and Medicare, that's how we're funding our Social Security program. So just to show you briefly what a Schedule C looks like, so you can see where that number comes from if you were to join. Notice Schedule C is referring to the profit or loss from a business. And at the top is where you're going to show your income. But at the very bottom, on line 21, is where you're going to show your profit and loss. And that is a number that you pay your Social Security tax. That's also the number that you pay your Medicare tax on. And that number is carried over to what's called Schedule SE. Your Schedule SE is where, that's how you calculate your share of Social Security and Medicare tax. And it goes down to line 6. So line 6 is the line you report to the company that I'm working with for them to amend your tax return. One thing I failed to mention is that I am working with a company called Anchor Accounting Services and their platform Gig Worker Solutions. They are a company that specializes in credits. And they were a company that developed a program to create a one-stop shop for you to be able to amend your return to take advantage of this self-employment tax credit that we'll learn more about, that you'll learn more about shortly. So these are the two things that they're going to be focused on when they amend your return: is what you report on Schedule C, and that number that you drove over to Schedule SE. Thank you, Al. Next slide, please. So before I got into the program, I thought it was important as you as business owners learn about what's happening and impacting you in 2024. As of March 11, 2024, the U.S. Department of Labor has changed on how they classify people as independent contractors versus employees. You know, as an employee, you have to get your payroll taxes withheld. And we don't realize that you don't have a choice. If you fit certain criteria, you have to be an employee. It's not an option. You can say, pay me as a 1099. And also, this is required by the Fair Labor Standards Act. And this is something they're going to enforce. And they will go and enforce it on the employer who made that contract with the independent contractor. So there are 6 factors that help you decide if you can be an employee or if you can be an independent contractor. And these are things you're going to have to weigh, because as of March 11th, they're going to be pursuing people who are non-compliant, because they know anybody who has an opportunity will say, guess what? Give me my money. I want all my money. Don't take it out. Write me as a contract. So the first thing they're looking at is, does this person have opportunity to profit or loss depending on their managerial skills? Now, most employees, there's no way they share in the profit or loss of a business. So if they can't share in the profit or loss, they're going to be an employee. The second factor is it's considered an investment by the worker and the potential employer. They're saying, if you as that person who's coming to me to say, Lisa, am I going to be an employee or an independent contractor? If I am helping you market the business and do things outside of what a normal employee would do, then I would bring the investment to your company more than just a regular worker. If I don't do things like that, that means then I would be an employee. The third thing is the degree of permanence of the work relationship. Many industries like music or different things, you work gig by gig. So you automatically know that's not a permanent thing. But if it's indefinite, continuous, or exclusive, then you are going to be an employee. Because when you work for somebody, you just can't say, I'm going to quit. You can quit, but you don't end a relationship that way. You're in it until, something happens with your performance. The fourth factor is the nature and degree of control. If the employer controls the performance, if the employer controls the dollars, if they schedule hours and they supervise you, then you're an employee. And the fifth factor is the extent to which the work performed is an integral part of the potential employer's business. Meaning, if you're critical to that and central to that business, that means you're more likely an employee. Whereas if something like me, I do accounting, that's necessary, but it's not central to the business. That's why I could be an independent contractor. And the last thing is skill and initiative. If you have some kind of specialized skill, then more likely you're going to be an independent contractor, because you're bringing that skill for that purpose. And then when that purpose is done, you move on. So you have to think about those things before when you're bringing in people into your business, you have to do that. And a reminder about 1099s also is, they're due by the end of January, and 1099s are required if you've paid someone during the calendar year for more than $600 during the whole year. Not one time, but if you put everything together and you pay me more than $601, then I have to get a 1099. And people don't realize that they're going to go after you for not issuing 1099s also, because that's how the IRS compares what someone who received a 1099, they'll compare their tax return to what the 1099s that were sent to the IRS on your behalf. And that's how they know if you're underreporting income. And most of the time people are, because they feel like, okay, I may sure, I may not. So important to remember that every time you fill a W-9 to get paid by 1099, that the IRS gets a copy, just like they get a copy of your W-2, and they match it to your tax return. So that's one reason they see, if you're being honest or not. Next slide, please. Now, another new thing that just came out that impacts almost every business out here is called the Corporate Transparency Act. It's going to require companies to report information about beneficial owners to the Financial Crimes Enforcement Network. It was set up as part of the National Defense Act because there's so much illegal money flowing through. Because realize drug money, all this money has to come through our system some kind of way. So they're saying, if I make you report who is a beneficial owner, and that'll be defined shortly, then I'll know where I'll have a better idea of tracking money. And that's what they're trying to do. They're not trying to necessarily be like Big Brother watching you know what you own, but they're trying to figure out how the illegal money is getting into our banking systems and into our economy. So this is one thing they're doing. Notice the mission is to safeguard the financial system. They're trying to prevent money laundering and illicit activity. And the goal is to increase the transparency in legal entities, people who have set up their businesses, LLCs, S Corps, and nonprofits. Because remember, whenever you're looking at people, even example is number 45, President Trump. He, has a lot of companies. And when they're fishing to see who owns whatever, they can't tell who the owners are. So by making people report who owns these companies, who has control over these companies, it'll help them track down and contain some of our legal activity. Next slide, please. The FinCEN has provided a compliance guide, so they're not leaving you all by yourself as far as to know if you have to do this. So I'm just going to briefly talk about what they consider a reporting company to give you a chance to know what it looks like if you go online and pull this guide down to help you decide, do I have to report to FinCEN or not? So can you pull up the reporting company PDF, please? That's the page right out of the book that's going to let you know, if you go through that flow chart, it'll let you know if you're a reporting company. But more importantly, they have a list of companies that they say are exempt. And this is how you know that more than likely you're not going to be exempt. And that's the harmful part of it. So, for example, if you are a Securities and Exchange reports issuer, then you'll be exempt. If you're a bank or a credit union, you'll be exempt because they're saying you have regulations already. You're being regulated and they have a lot of information about you. If you're a money services bureau, you're exempt. If you're a broker or dealer in securities, notice all these things are regulated industries that already have compliance to it. If you're a public utility, if you are a financial market utility, if you are a tax exempt entity. So the whole book will take you through it. And I was just trying to give you an idea that to let you know that, like it or not, we are going to have to report, and that includes me. And so just know that you have to do this. And my advice to you is, if you have a question, to seek your legal advice, or just go online. And they also have a help number you can call. But this is something that there is fines associated with it, and we'll talk about that on the next slide. Notice, you don't have an option. I don't like, anybody and everything, but this is something they're requiring. So the question is, what if you don't report? A non-compliance beneficial owner has individual liability. I mean, they're going to go after you personally for what you don't report for your business. But if you willfully do not report your company information, there's civil penalties up to $500 a day. That's a lot of money. And criminally, they can say up to 2 years and $10,000 fine. So they're saying once you become aware that you didn't file something correctly, you have 9 days to correct it. But you can't just say, I didn't know, and it'd be okay. Next slide, please. So notice, there's no harm in reporting, even if you think you're exempt. As long as you're accurate and truthful, just report it. So when in doubt, I say just send it in. So notice, now we're going to define who is a beneficial owner. So notice, both of these things have to apply. You either have to own the company with at least 25% interest in the stock, the profit, or the voting rights. That's part A. Where part B is individuals who directly or indirectly exercise substantial control over the entity. They also have to own 25%. And these are the people that have to report this information. You have to report about, meaning senior officers like your CEO, CFO, COO, your general counsel. It could be anybody in your company that has significant control. If you're LLC, the primary company that runs your business is a manager, and that will be listed in your startup papers. Board members, remember, this is for-profit businesses. Board members, if they have authority to appoint or remove, they could be, and they own 25% of the company, then you have to report them also. And other important decision makers that are in your company that make decisions regarding business, finance, and structure, if they actually own 25% of the company too, you're gonna have to report them too. This is all new. They've been trying to do it for a while, but it's been inactive as of this year. So they're saying the applicant is a person who goes online and filled out your articles of incorporation. So if you already started your business before 1/1 of 2024, you don't have to worry about reporting that person. But if you just started your business this year, then whoever the person is who registered you with the Secretary of State, that person also has to be reported in this report. Next slide, please. So then it's talking about how much time do you have to file? If you were incorporated before the beginning of this year, then you have until December 31st of 2024 to do this report and put the information in. If you started a business in January, then you will have 90 days to actually complete the report. And if you have a change, like say you had a board member or somebody got married, somebody died, you have 90 days in 2024 to make those changes. So the goal is for them to have like a database of who owns what. So when they're doing their diligence searching for information about companies and financial things, then they'll have the information. Next slide, please. So notice, no one else will have access to this database. Only FinCEN will. So it won't be searchable like you can if you go to Secretary of State looking for a company. It's supposed to be limited to access by your federal and your state law enforcement and regulatory agencies. So the website is right there, www.fincen.gov. And also, when you're doing that report, it's just asking that same basic information. So you shouldn't have to pay anybody to do it. So that if someone's telling you got to pay, then it might be a scam. And there's two ways you can file. You can either download the report and then fill it in as a PDF and submit it, or you can actually go online and submit it. But before you do anything, please pull down that small entity compliance guide and use that as your guide. Next slide, please. So this is the moment we all been waiting for. This is the reason why I did this Zoom, is to educate you about the self-employment tax credit. Think back to your tax years 2020 and 2021. Was your income or industry negatively impacted? So many people were. Theaters were shut down. So many jobs were shuttered. Did you have to care for someone who had COVID-19, or did you yourself get COVID-19? Where you had dependents who couldn't go to school and they were impacted, or your daycare was impacted? As long as you were negatively impacted by or during the pandemic, they have a remedy for you. They thought about you. Next slide. So we're going to talk about how do we see how much money you have a chance to get back. Like I told you in the beginning, this is a no-cost thing for you, but you can make some money back, and anyone would want money. So first of all, the first question you have to ask yourself, did you file a Schedule C for tax years 2020 and 2021? If you did, then that's check one. That means you got that 1099 income, and you showed it on that same form we talked about earlier to show, because the whole goal is they want to try to give you a refund of part of your Schedule C based on what you say is happening. Now, as I stated earlier, I'm partnered with an accounting firm that specializes in tax credits named Anchor. And you will need to allow them to amend your 2020 and 2021 tax return to receive this tax credit. They have been in business for years, and the owner also has a tech company who has built a platform to actually be able to handle the volume of business. And they expect so much business from just this just processing amended returns that they have already hired over 800 people. Now, to do that, you will need to open up an account on their gig worker platform. The URL is on the flyer. There's no upfront cost. There's no fee for you, and there's no security risk. Everything is built in. But the maximum credit you could have potential to receive is $32,220. So my thing is, you have nothing to lose. Why not go for it? Next slide. So I have a video to show you just how easy it is for you to sign up and you to be part of this program. So notice, when you hit the URL, you're going to just create an account. It's a free account. You would decide what your name and, you put your name, your email address in. Notice, it's easy, nothing hard, and we'll be through the process in less than 5 minutes. But that is the screen you'll see when you hit the URL code that I gave you. They're going to have you enter your information. You'll have to create an account, and you have to verify your account. And once it's verified, you have to log in again to start the process. See, it's simple. It's not hard. What if you could be blessed with a windfall you didn't you didn't expect? So it's important to verify it. Then once you log in, this is the next screen you're going to see. I've now entered the site, and I'm going to begin the process of entering the self-employment tax credit portal. And this is what you'll see. The first thing I'm going to ask you to do is to calculate your credit. So they're going to start asking you questions, and as the video plays, you'll see, and this is what you'll see if you were to just be considered. There's no obligation. This is just all informational. You'll put your information in about your name, your basic phone number, date of birth, those type of things. Notice there's no asking you about anything related to your debit, credit card, paying it, nothing. It's just creating that account for you, letting you go through the process and see if it's something you want to do. So this all is no obligation, no anything. Now, one thing I learned was when you're choosing your date of birth is to use the drop-down calendar versus trying to type it in. So use a pop-up calendar. It'll save you time. Then they're going to ask you questions that you'll respond a yes or no to. They ask you where you're self-employed for that certain period. They ask you about everybody's negatively impacted. They ask you how many days during a certain time frame were you impacted, because the credit is based on certain windows of time during the pandemic. So it's very simple. It's just, and I noticed one thing I didn't emphasize too, is that the IRS is not asking for any kind of documentation for this. And at the same time, I'm saying don't get crazy about it, but the IRS is not saying you have to have some proof. So notice when we did that Schedule SE, they asked you for your Schedule C self-employment earnings. And so when I showed you that Schedule C form, they're telling you what line you're going to put that number in. And then they're going to ask you about tax year 2021. You go through the same thing about how many days you were impacted. So it's an easy read. And it's designed to be that way. Then once again, I'm going to ask you about your earnings for 2021 because that's the two primary full years that we were impacted by COVID-19. And then at the end, it processes and it tells you based on what you put in, this is your estimated credit. That's how simple it is. Thank you, Al. Next slide, please. So now we're going through next steps. You went through online, you created your account, you went through your questionnaire, and you got your credit estimation. Now to move forward with this program, you're going to have to at least have a credit of $3,000 or more for them to process your information. Any credit below that, they're going to ask you to go back, verify your income details. Notice you must upload a complete 2019, 2020, 2021 tax return. And the reason they put 2019 in there is because you're able to use your income from 2019 to maximize your credit. So that's why they ask for all three, even though you're only amending tax year 2020 and 2021. Now, Anchor will only be amending the necessary forms, but they have to have your complete tax returns. You can't just upload them a Schedule SE and a Schedule C. So if you fail to provide those tax documents within 5 attempts, that means just close your file and move on because this is a volume business. As I stated earlier, they've hired over 800 people just to deal with this part of their business. Next slide, please. And also, this is a serious agreement. This is not a scam. This is as if you were going to a professional tax service. You'd have to actually sign agreements, sign an engagement letter, all those things, and allow them to represent you before the IRS in case there's an issue with what was submitted. Notice their staff will review these uploaded documents, and at that point, you'll be hearing information from them. I will not be involved in any of this. I do taxes. I do all of that. But when I've heard about this, I'd rather be on the other end, letting other people know about the opportunity because the window of opportunity closes quickly. So notice, if you decide to go on and you've signed your onboarding agreement and you've uploaded your information, they're going to be communicating with you via email. Don't ignore it because you don't want to get lost in the queue. You want to see how you get this money. But after they review it and they clarify everything with you, then they're going to prepare the amended returns, and then they'll do an internal review for accuracy. Next slide, please. Then at that point, when the return is prepared to show you how real it is, they're going to actually send the returns via UPS to your home. You're going to review it. You're going to sign it. They're going to give you a postage paid envelope to send it back to them. Because the IRS has to have a paper hard copy and a real signature to process these amended returns. And if you don't send them back their amended return, there's going to be a $600 fee because they've already invested their time and things. They're saying, okay, you put through all this, you're going to owe $600. You're going to have 15 days also to return those amended returns. And as of January 16th, they've already processed 11,000 amended tax returns. You gotta remember, it's a big gig worker economy. There's over 50 million people who classify themselves as gig workers, especially during that time. So we're trying to reach as many people as we can. So it's a numbers game, and I want you to be part of those numbers. Now, once you sign those amended returns, they're going to be sent to the IRS. And the standard wait time they're saying to process everything is 22 weeks. But notice, you're going to, because you had created that gig board account, you'll be able to see what's happening with your individual account. You'll be able to go on, it will show where you are in the process. It would even be a button for you to see when your return will be processed by the IRS, all built in their technology. They use state-of-the-art technology. They've invested millions and millions of dollars for this. So notice, they even thought of, okay, what if you want to wait 22 weeks? There's a way to get your money now. Anchor has provided a way for you to get your money in advance, so you have to wait. They have equitable partners that are willing to fund your advances, but the advances are going to be based on credit score, of course. So you have to choose that option. And then if you choose that option, you'll be hearing from a company called FinTurf. And they'll send you emails. And that's something that, like I said, once again, is based on your credit score. And of course, there's a fee involved. But remember, you've paid no money up front. You know, all you did was take a chance to be blessed. Next slide, please. So just to remind everyone, Anchor, the company, and gig workers, they've invested a lot of money in infrastructure, staffing, and technology to make this a one-stop place for you to come and take advantage of this opportunity. So that's why the estimated cost is at $600, but that's just an average of trying to recoup something. So the question is, how does Anchor get paid? All fees they are taken off the top of your refund. Notice you have not personally paid $0 up front. That's why going through this process is so beneficial. You never leave money on the table, and this time you shouldn't, definitely, because we didn't even know it was here. So notice, let's do it. Next slide, please. Notice that I just wanted to share this process with you. Notice it wasn't time consuming, it wasn't labor intensive. You just had to have your complete tax returns available. And I also want to make you aware that I'll also be doing other seminars to bring new opportunities to you, not just about what's happening in your tax law, but just even educate you as an entrepreneur, because my goal is to equip, educate, and empower entrepreneurs for success. Does anyone have any questions that I can address right now? Well, if not, I'm gonna close it out and say thank you for your time. And if I can ever be of service to you, give me a call. My information is available on that flyer. I look forward to working with you and engaging with you in the future. Thank you. Good night, everyone. Thank you.